And moving on to the market, the Northern Nigeria flour mill swung to a full-year earnings per share of 1 naira 42 kobo. The flour miller saw revenues fall 7.7% to 11.7 billion naira, while profit after tax swung to 225 million from a loss of 21.7 million naira. The result reflects an improved gross margin of 6.7% from 4.8% in the prior year, leading to a significant increase in operating income. And staying with the markets, SEOA has reported an 85% decline in second quarter earnings per share to 1 kobo. The conglomerate saw revenues drop 1.4% to 2 billion naira, while profit after tax fell 85% to 9.7 million naira, reflecting cost pressures and a significant increase in finance costs. And now moving on to how the markets fared today. Of course, it's a shortened trading week, and what we found is that the market has fallen every single day this week. Today it closed down about 0.5% to 38,038 points. This was as a result of losses seen in companies like Guinness Nigeria, Cadbury Nigeria, Dangote Cement, of course, the heavyweight on the market, also put pressure on the index. Nigerian Breweries and PZ Cussons was also one company that fell back. Now, some of the gainers on the day, on the other hand, included Julius Berger, which of course has been a bit volatile recently, Champions Breweries, Bitter Glass, and Cornell. Babajide Sholanke in research and strategy at FSDH Merchant Bank is standing by to give us some thoughts on the market. Thank you so much, Jide, for joining us. So, a very interesting dynamic we're seeing here. Last week, the market was up every single day. This week, of course, it's a shortened trading week, and the market is down every single day as well. So, pretty volatile period right now. Your thoughts about where the market is now?
Yeah, thank you, Wally, for having me. As Rival said, the market has lost every single day for this week. And, you know, the first call suspect is that because of the shortened week, as you've said, shortened trading week, as you said, significant profit taking has occurred, most likely because of the holiday season, and people just need some cash to throw around to enjoy the long vacation that we'll be having.
All right, so interesting point there. But if we look at the volumes today in particular, not very significant, just over 2 billion, or just under 3 billion naira. And if we now take it to where the money is coming from, if we look back at June, for instance, we're seeing the foreign investors beginning to dominate the market again. At least that's what the data tells us from what the stock exchange is publishing. Are you surprised, particularly in June, that the foreign investors are beginning to lead the way again?
Yeah, I'm not really surprised, because if you look at the Nigerian economy, basically, foreign investors will be looking at key macro data for Nigeria, which will interest them to come in or otherwise or stay out. And macroeconomic data for Nigeria seems very positive, both current macroeconomic data like inflation, like GDP growth rate reports, one of the highest in the world. So, although still far away from where we were historically, and look at the current account to GDP is positive, one of the highest in the world, about 9.9%, and all that sounds well. And if you look at the fundamentals of the companies in Nigeria, of course, some of them are overvalued, but there's still value for them, particularly for and again, people took positions in the market for an investor because of the earnings season for companies that give interim dividend.
Right. Okay, let's stick with the market and the impact of what's going on in the fixed income market or on the equity space. Of course, today is the big day in terms of the effective date for the Monetary Policy Committee's decision to introduce a 50% cash reserve requirement on public sector deposits. The interbank market has been quite volatile, but interestingly, T-bills and fixed and bonds have been relatively stable. How do you think this is likely to impact equities going forward?
Yeah, going forward, as Rival said, anything that happens in the fixed income market, of course, affects the equities market because of the trade-off between the two of them. But I will tell you something, Wale, the equities market will act independently of the fixed income market in terms of attracting capital, attracting funds into it. The fixed income market going forward will remain choppy, but overall stable, because government needs money to finance its activities, and there are significant threats to oil revenue, and we just need this income from abroad. Yeah, we need these funds from abroad in terms of foreign portfolio investment, and well, that will continue because of the monetary policy in advanced economies like the United States, the Euro area, Japan, etc. So we will continue to see, you know, some kind of choppiness in the fixed income space in terms of yields, but overall, as you've mentioned, there will be stability when you draw the trend line, trend curve, you know, into the future, extrapolate into the future. So for the equities market, we won't see any significant. There will continue to be attraction because of still macroeconomic environment, because of good prospects of quoted equities on the floors of the exchange. So both, as we've seen since the beginning of the year up to now, will continue to attract funds at different levels.
All right. So all that said, where do you see the equity market headed from here? How strong do you think the rally could be, or do you get the sense that we're going to see this market trade sideways for a while?
Yeah, I suspect I will see it trade sideways for a while. But as I've always said, I maintain my view that the market fundamentally has significant number of stocks that are currently overvalued in terms of capital appreciation. They've done so well. They've beat all indices in terms of inflation, whatever, or alternative investment yields in terms of treasury bills and bonds. So we'll continue to see profit taking, intermittent profit taking in between the line. To end the year, I suspect that the market will gain about 5% from its June figures to end about 36% year to date. All
right, so we'll see if that plays out as you say. But let's talk about the stocks that are likely to move the market forward from here. What are your favorite stock picks right now, Jide?
GT Bank, because it's a strong brand, has a lot of significant goodwill, and I think the earnings is smoothed out and protected from the vagaries of the economy and the market.
But they have yet to report, and you will expect that they would have reported by now, don't you think?
Worrisome. Yeah, worrisome. And most of the banking stocks that lost today were banks that have not released their result. FBN Holding as well, UBA as well. Well, I'm not scared about what is it. I just suspect maybe just some regulatory hiccup. Maybe the central bank needs to look into one or two things that they're not very comfortable with, etc. But I expect them to post strong numbers. I expect them to give interim dividend. So going forward, I'm still very positive about the earnings potential of the company. I like flour mills too. I like companies in the flour milling and the sugar refinery business as well, because I believe this input cost for them is going to be reduced and low going forward because of the drop in the prices of their input, particularly wheat and sugar in the international market. Of course, even the outlook for these raw materials is expected to be on the decline, going forward.
All right, just those two. I mean, what about Dangote Cement? Dangote Cement, everyone talks about Dangote Cement. It seems like one you must have in your portfolio. Are you bullish on that stock?
We're cautiously bullish on the stock because of it's not there's not much of it out there for people to have.
So the issue for you is the liquidity of the stock.
Yes, no, it's liquid. It's liquid. You will always see people buy and sell, but in terms of volume size, you may not have that which you require for you to make significant return that you will be comfortable with.
All right. Do you feel speculative at this time? I mean, a lot of people call the insurance space a bit speculative. Do you get a sense that this is a stock this is a sector rather that could rally? We're still expecting many of them to report. Only a few have reported for 2012.
And well, for the insurance sector, I think I'm catching the feel that these companies will return a good return to end the year, and it's not too far away from what you just raised earlier on concerning the the new data released by the Nigerian Stock Exchange concerning the foreign investors' participation in the Nigerian Stock Exchange. If you look at January, February, we had domestic investors dominate the market. March, April, we had foreign investors dominate the market. In May, the domestic investors came back. In June, the foreign investors are back. And if you look at the domestic investors, significant as of June, 67% of the participation was from institutional investors. And if you get down to the nitty-gritty, of course, we're not further exposed to the data that considered institutional investors, but of course, they will be made up of pension funds and insurance companies. So I believe insurance companies have actively participated in this rally in the market, and I believe that they will report strong numbers. Some of them will, maybe not all of them, but a significant chunk of them will release this.
Well, I think a lot of people at least are hoping that they let them report 2012 first, and then we can begin to think about how they've benefited from the 2013 rally. Thank you so much, Jide. Let's leave it there. Jide Sholanke, research analyst at FSDH Merchant Bank, talking us through the Nigerian stock market.